Hi, how's it going? So right here and right now, what we have open is a chart of the 10-year bond yield. And what we can see is that we're at a very, very critical level here, that this trend line is being being massaged by the price at the current moment. So whatever is happening here is affecting the entire debt market and it's affecting the entire equity sector. So when we're talking about bonds, what we're actually talking about are government debt securities. So these are pieces of paper or documents which the government buys or sells. So this is the only instrument that the government actually trades. So knowing how the government is trading gives you great insight into what's happening in the market. So here what we're looking at is the bond market, the 10-year yields, and what we see is that we've had this top here and this top has brought a heavy selling of the bonds. So this top is actually a level of supply. So there was a big supply of these 10-year bonds, and this supply drove the price down. So it's here at this trend line at the current moment, and we see that this trend line is really strong. This is a weekly chart. So this trend line has the initiation at this point, and then it has the confirmation at the second touch. And here we have this third touch, and this is where price currently is. So in analyzing what is happening and in trading in this market or in this environment, because this is what's affecting everything else. So this was the break that was experienced here, and when this level was broken down, we see that there was this green candle that tried to move up, but then price has been coming down since. So what we would have wanted to see was a bounce in this area, which we didn't get. So if price continues to go down, as you can see, this candle used to be support. So if price continues down and goes beyond this level of support here, which is this entire zone where price currently is, in terms of supply and demand, we're going to see that this supply is what is reflected in this move. So here at this level, at the 2.5 level, this is where we're looking to see if price is going to find some significant support if it breaks this trend line. Because once a trend line is broken, it means that it's broken. So if this is happening, then we're going to be looking at what's happening on the downside. So if in fact this is a break, which at the moment it looks like it is breaking, because we are seeing these previous 2 weeks have been down weeks and there's been a lot of selling pressure. So we haven't seen anything that's telling us otherwise. So until we see something that is telling us otherwise, then we're going to be looking to go where the price is. So we don't have an entry or an exit in the market as it stands, because as you can see, this is a weekly chart, and as I'm recording this, this is a Monday. So we see that a lot of selling pressure has been coming down on this price. So we want to see if the week overally is going to hold on to this level. So this is the 10-year bond yields, and that is what it is showing us. So as we all know that everything is always following everything else. So this is the 30-year bond yield. So these are going to be redeemed after 30 years, but at the moment they're being traded. And the bond market is actually the most liquid market. So there's a lot of buying and selling that's going on here. And the liquidity in the bond market is actually what gives us the liquidity in all other markets, because this is how the Federal Reserve trades. This trades with the government, the treasury trades with the government, and this is what's going on. And the central bank is the one that guarantees the payments. So what we have is the 30-year bond yield is pretty similar to the other 10-year bond yield, and we have this uptrend. And this seems to have been perforated by price, but we do see that price tried to come low but failed in 2 consecutive weeks. So here this pin bar and here that pin bar are all representing rejections in the price. So what's likely to happen is a move to the upside, and this is what we're going to be monitoring closely. And when we're looking at the 30-year bond yield, we're looking at a very long time frame and would want to see what is happening there. So here in correlation with what is happening, we see that the bonds have been in an uptrend, which means that they've been in a high-risk environment. And this is a 5-year bond yield, and we see that we have a similar shape to the 10-year yield, and price is coming toward this trend line. So we'll see if we have a bounce at this trend line, because as it stands, as price is in this position, the place with the highest probability is the upside because of how it is. And we would want to see if price does indeed break this trend line, but the initial instinct is to go long. So this is a very similar shape on the 5-year yield as we see on the 10-year yield and as we see on the 2-year yield. So here, this is a 2-year yield bond, and we see that we have this huge sell-off as well that is following this shape. So we'll see if price is coming back here, and instinctively our instinct is to go long. So this is what we're going to be tracking on all of these on all of these instruments. So the primary trade is actually going to be this one, the 10-year yield, which falls in the middle of those four. This is the middle one. So this is going to be showing us exactly what's happening in real time, because it looks like the 10-year yield is already in play. So whatever is happening to the bond yields, we're going to see that the longer time frame will always dominate. So we're going to be looking at what happens to the 30-year bond yield, and hopefully we'll follow the leader in terms of that. So as that is going on, we're going to be looking closely at what happens at the 10-year bond yield. So in bond trading, what we're looking at is actually the trading of the central bank and of the central authorities, because these are the people who issue bonds. So when there's a demand in bonds, we know who's buying and who's selling. So this is beyond smart money and hot money and dumb money. No, this is the entire financial system. So the entire financial system is built on bonds. So these bonds are what's traded by the financial institutions. So what every other trader is doing, whether the trader is in a hedge fund or just in an office or wherever you might be or I might be, whatever we are doing is mirroring what the two traders are doing. These are the original bulls and the bears. So this is going to be determined by supply and demand. So what makes it easy for traders to understand the dynamic of supply and demand is the fact that we are able to see what is happening throughout different means, because we just see what they do over and over again, and we try to anticipate the side with the biggest probabilities statistically distributed over time. So this is what we're looking at, and this is just us going through the 10-year yields, the 5-year yields, and the 2-year yields, and how they're going to be following up with the 30-year yield. So the 30-year yield currently has the biggest return, which is 3%. So we want it to maintain the 3% to the 2.9% yield going up. And we're going to be monitoring that the 5-year and the 2-year yield might go down for a few weeks perhaps, but when they do, they're going to be within the trend line. So we're always going to be looking for those changes to be made, and for any significant move to be followed through by fundamental aspects, and for us to see that through the market correlation. So this is what we just went through, and just pay attention to the updates on this video so that we can see how to navigate this very fruitfully. Thank you so much.